What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. Before we get going, I'd like to make your attention to the newsletter. If you're interested in receiving 5 to 10 swing trade ideas, just stocks I think that will move throughout the course of the week, they're at a key point on the chart, then sign up at the first link in the description. Again, that's 5 to 10 swing trade ideas. And this week, I do have a little comment in there for a longer term investment that I'm going to be looking at. So if you want to see what that is, sign up, first link in the description. Also, I'm on Instagram, so if you want to get one stock scan per morning, I usually post something around 9:20. And you'll see a scan with an analysis somewhere on the bottom. So on Instagram, that's at tradebrigade.co. You can find me there. I'll also have a link down below in the description. Without further ado, let's get into the analysis. As always, we have SPY, the Qs, and IWM for the broad market. Then we look at some companies, as always, Apple, Netflix, Tesla, Alibaba, Facebook, NVDA, Microsoft, and Amazon. So as always, starting off with our SPY weekly chart, you can see you have a bit of a topping tail here, right around key resistance that we were talking about. Prices couldn't really find acceptance above this line here at 297.88. So closing just slightly above, maybe right on it. We'll look at the daily here, but on the weekly, do note the topping tail, and there is some new resistance up here, right around 300. Alrighty, so as we come into the daily, you can see we've made a nice move up off of this support trend line at the bottom. This week essentially started off with a major gap, or Friday had a big gap up. I didn't think that we were going to find acceptance this high, but it looks like we did. You can see prices sort of just went sideways and didn't really move too far in one direction or the other, eventually closing here. Like we said, just above that 297.88. So a little bit of a bottoming tail there on Friday's session. So maybe there's some support below us here, but also keep in mind that resistance that I was talking about around 300. So the key here is whether or not we break out of this high. If we break 300, then we move to the all-time high. Obviously, our next resistance up there at 302. If this gives, though, and this area of the chart sort of doesn't hold prices, if we get below this 295.75 just about, I'd call it in here, then we're looking to do a gap fill all the way back down to our 294 level, and that's going to coincide with our 50 SMA as well. So keep in mind the gap fill on the bottom or a move to the all-time highs depending on if we can get over 300. So the Q's a little bit more range here than on SPY. The key level on this one is whether or not we break down below 190. Obviously, you can see 1, 2, 3 touches on that support level. If we break down below, again, we're looking for that gap fill to somewhere around 188 and the 50 SMA. However, you can see we do have this resistance to contend with, although not on SPY. It is on the Q's. We have a trend line to contend with, as I just said. And if we get above it, we're looking for the all-time high at 195 and potentially going further than that if earnings season, a lot of tech companies, big names are going to be reporting in the upcoming weeks. So if we get bullish movement based on earnings, then I would target the upper end of this resistance trend line, this longer term one. And depending on when that happens, it could happen anywhere between 199, low 199s, as you can see on the right hand side there, the price, all the way up to say to the end of the month here, or the beginning mid November, could be somewhere around high 200s, 280 cents, as you can see by the cursor. So keep that in mind on the upside. Again, downside, we're playing the gap fill if we break down below, and if that gives there, we're looking for some support to come in based on some of these touches in here, around 185. Anything lower than that is these areas on the chart that we have mapped out, and the 200 SMA, which will be coinciding with this 183 level as prices continue to move sideways or up, really, as the 200 starts to catch up there. I'm leaving IWM zoomed out a little bit just to explain some things here. You can see at this attempt on the trend line, the resistance trend line where my cursor is, you can see we didn't quite make it all the way up to it. The next attempt didn't quite make it all the way up to it. This attempt we had a fake breakout, fake break above, and then fell back down. Again, fake breakout above, found resistance here, back. And I point this out just because we're at this trend line now with a big indecision candle based on Friday's action. So if we zoom in a little bit, you can see that 200 SMA is providing some support. We closed above it when prices fake break down below. Buyers stepped up, really pushed the prices back up. That's why we have this big tail here, but this resistance is important. So a few things could happen. Obviously, it could do a fake breakout and go above again, in which case, it's going to stop somewhere between this price level here at 158.12 and where it is now. So somewhere in here, price could see some resistance. That could be somewhere around here, 156, based on, you can see these highs in here. Real tough to get through those few days. So that could be a good target. if we do see a pullback off of this level, and I think this is the more likely scenario, then we're looking for the 50 SMA to provide some support. That's the blue line here. Anything lower than that, we're going back down to 144.96, so 145, and I think that is our very key level just based on all the times it's been support here, 1, 2, 3, 4, and you can see if we break back down below, not really much to go on. I've talked about it in the past. We're looking at 136 on the downside if that major key support gives. And then again, thick resistance overhead. But I think the fake breakout is potentially there, if not just a pullback off of this level. Getting into our companies now, starting off with Apple as always. You can see we're running into some resistance up here at the all-time highs. We have 238.13, 1, 2, 3, 4 touches to that level. That to me looks like a knocking on the door pattern, where if we see bullish earnings, you can see we have earnings here on the 30th, then there's a very good potential to break up through that. As you can see, the pressure is building below, and then after that, it's really whole and half dollars on the way up, as we'll be in blue sky territories. But on the downside, it's very clear as well. You can see we have a touch here and a touch here, 3 touches on the bottom as support here at 233.47. So I'd just call it 233.50, the round number there. If that gives, we're looking for a gap fill down to 230.14. Anything lower than that is essentially this support trend line that we have drawn in. If that sort of gets violated, the 50 SMA will be coming into our save us really shortly as it starts to catch up to price. Anything lower, we're looking at 217.15. So Netflix already had its earnings, and you can see it just it had a big gap up and then sold off all day. I guess I was wrong in thinking that price wouldn't get back up above this level, but when it did, I was right, and prices sold off. So again, I don't really believe in their business model anymore. They're just paying way too much for their content. That's from a fundamental perspective, but from a charting perspective, with all this red volume, it doesn't look like the selling's going to stop anytime soon. I'd look for a daily bottoming candle, so some sort of hammer or pin bar to form somewhere around one of these supports before it sort of consolidates and goes sideways. But based on the magnitude of these candles, it doesn't look like the selling wants to stop. It might be getting a little overextended to the downside. It might need to pause and take a breath, but I would imagine that another move to the downside is in store. But we're prepared. We have support here at 268.12 and another target down below at 252.30. If that level gives, 231.58 based on some very, very historic support all the way back here. So keep those levels in mind on the downside. Again, on the upside, I think it's really mapped out for us, and I don't think that the upside is really going to have much in play. But if it does, 325 cents, and then this thick level up here between 310 and 316. So looking at Tesla here, you can see we have earnings on the 23rd. So I wouldn't really hold any options plays through earnings, just because you'll probably get crushed as premium becomes inflated before and obviously deflates after. But right now it looks like a pretty good start to a bull flag. So we have a nice move in the upwards direction, seeing some consolidation and a bit of a pullback here into the 200 SMA, right around some support at 258. So this is a really positive sign to see another move in the upwards direction. If we see some consolidation, sideways action, and then if we can get above 265.82, you can see we don't really have much above us based on the chart yet, but it looks like our next sort of resistance level comes into play at 281.11. We'll draw that one in, and then based on this one up here, we'll just keep it simple for now. That's quite the move up, but we're looking at 281.50 and then 295.50 just for round numbers sake on the upside. Any sort of move back down into this range, this is our key support. We don't want to get back down below 247.82. If we do, we're just going to be chopping back around in between these price levels. As you can see, all these touches, if we get back down below, it's not really a good sign that we are making progress in the upwards direction. If you want to track a trend line, you could draw in something like this. You really want to maintain above that, higher highs, higher lows forming. But again, this is our key level at 247.82. Alibaba, big sell-off here on Friday. I think there was some things going on in the news with China. So being a Chinese-based company, boom, big nasty move to the downside. But look at the volume. It's substantially larger, but no larger than this bar here. You can see, so keep in mind it was a pretty nasty day, but volume-wise, not as nasty as it has been in the past. So if we get back down into some of these supports, we're looking at 167.93 to offer our first sort of bounce or area to go sideways. You can see we have a bunch of touches here. That would do a gap fill pretty much to here, which would be a cool sign to see, good target. And then if that gives, our next support's down here between 164.08 and I'd say 161.90. I'd call this sort of a support zone just based on the way how some of these tails are piercing through. And then we have this other, wow, that was weird. So sorry about that, but just because we have our touches here as well, I'd call this a support zone based on the way prices acted around it. So that's on the downside. Any sort of move to the upside, obviously we have our level up here at 179.37. It's quite a ways away. And seeing how we have such a nasty day here, again, I'm expecting more of a downward move and sideways consolidation instead of any sort of major upswing. Facebook earnings again on the 30th, so keep that in mind. No option plays through earnings unless you're looking for something that sort of captures the time decay and you have a pretty wide range. That would be an advanced play, not just a directional one, directionless rather, just sort of hoping for it to go sideways. Anyways, again, nasty day on Friday, but finding some support at our 50 SMA, which is a good thing. You could call it a pullback after such a nice move in the upwards direction. Although it is nasty for it to happen all in one day, it would have been nice to see this sort of happen and go sideways in this channel as consolidation and then break out above. But you can see if you're watching 1, 2, 3, all these touches here at resistance, it was no surprise. Once you saw the red come in, boom, you could have gotten on the puts and made some money there. So nice if you got on it, but we're at the 50 SMA support now. I'd expect some sideways consolidation just because of how this acts as support. And then if we get a breakdown below, we're looking at 179.62. Anything lower than that, and that'll sort of coincide with the 200 SMA, but anything lower than that, we're looking at 176, then 173 just about based on some of these lows. And then earnings, obviously, it'll be one way or another. Big move, big gap potentially. So some extreme levels to keep in mind, 160.90 on the downside. And on the upside, we have the back test of this resistance trend line now that we're below it. But we could look at 198.61 and a 205.39. NVIDIA earnings as well, a little bit further away, as you can see here on November 14th, so quite a little ways away, but just something to keep in the back of your mind. So right now we're consolidating after a nice move up, so this is more of what I would have liked to see on Facebook. We're finding support based on some of our previous highs here, so beautiful to see. The breakout out of this longer term symmetrical triangle does look like it's still healthy. As long as we maintain above 188.40, I think things are looking good to make the move all the way to 206.33. So those are my thoughts there. If we do break down below 188, obviously we have 178.68. Anything lower than that is 173.47, and then that's going to coincide with our 50 SMA. Lower than that, and obviously the uptrend is sort of less powerful. 200 SMA and the back test of this previous resistance level, but we already did that. But we already did that here, and that would be not a good sign to see continuation to the upside. Microsoft still consolidating after its master and monster run this year. Perfectly fine to see, but something to note on the back test of the resistance trend line, since we were below it, we did see a negative reaction. So keep that in mind. Again, at the 50 SMA, it would be fine to pull back into this support level. As you can see here, it would still maintain higher lows, but we really need that higher high to be put in. At this point, I would call it a knocking on the door pattern. 1, 2, 3, 4, 5 touches to this resistance trend line. Any sort of move above it, pressure has been building below, and it could certainly send it up to 150 maybe. I don't know. On the upside, we're playing whole and half dollars as we're in blue sky territories. On the downside, if this support trend line gives, we have 130.67, 200 SMA, and again, earnings here on the 23rd, so early on in the week. So 123.01 as well on the downside for any sort of extreme moves. And last but not least, our favorite, Amazon. You can see we did get rejected at our moving averages, back down to the lower end of our balance zone in here. So we saw the move down. We didn't quite get all the way down to 1672. Again, that's still a target I would keep in mind on any sort of downward movement. We have some support sort of in this area around 1707 based on a couple of tails in here. So if we break down below this 1751 level again, like we did here, I would first target the 1707, monitor for continuation, and then look for the 1672. I don't think, unless earnings does anything sort of crazy for Amazon, we might see a move back up to this resistance zone, depending on how bullish earnings are, if they are bullish at all. Extreme levels again are 1950. and extreme levels on the downside. If that 1672 gives, we're looking at 1585. So that's going to wrap up this week's episode of the Weekly Watch List. Again, lots of earnings plays to keep in mind as we head into the end of October and early November. So options might not be the best way to go if you're looking to hold through earnings, as the premium will deflate on the other side. As always, if you're interested in receiving those 5 to 10 swing trade ideas, sign up for the newsletter. It's the first link in the description. Follow me on Instagram. You can see a swing, or not a swing, but a trade idea every morning. And with that, I wish you a green trading week.